All right. Welcome back to the Discount Weekly Show, the Sunday macro show, the week ahead. Here to help you prepare for the week ahead and the months ahead. We have a lot to go over today. I'm going to cover a lot of things in the financial sector, some of the longer term charts on all the major indices, as well. If you haven't subscribed on our website yet, please do so. We have our second macro weekly Sunday newsletter coming out tonight at about 7 p.m. Be on the lookout for that. It's completely free. All you have to do is type in your email, and we break down what you should be paying attention to, what we are paying attention to at the very least for the weeks, months, and years ahead. So let's get right into it. I'm going to foreshadow a little bit about the discussion today and as well what's going to be in the newsletter later tonight, with showing this monthly chart of the XLF, which is the financial sector, and how important this chart really is, and where the S&P 500 and the NASDAQ currently stand today. We are also going to be taking a look at the IWM, or the Russell 2000, and how important this is as a market leading indicator heading into what could be a massive bull run or a massive bull trap, as we've been talking about. As always, let's kick things off first with the all-important S&P 500, the SPDR's daily chart. This was the bear market trend line, the bear correction trend line that this market had to stay above, get above in order to start a new bull trend. Now, since then, we are very much in this uptrend here, well above all the moving averages. Now, if we do some common sense technical analysis, again, let's just draw where we are in a Fibonacci retracement sequence here. Well, what did we do? From the October low, we came up, tagged that bear trend line, came back down to the 236 retrace, broke out with vengeance above that bear trend line, came back, retested it. This was really your buying opportunity if you're a momentum trader. We were buying call options here. And then it has since taken off to the upside. Now, where are we today? Well, today we have just melted right up into that 618 retrace here. And I would not be surprised to see some type of pullback now from these markets. It is just super extended. That said, doesn't mean you necessarily want to get in front of this. It just means that it's due for a pullback. It is into some heavy resistance here, a significant Fibonacci retracement, and it's extended from its 20-day period moving average. So would we be surprised that we see some type of breakdown here to retest its 20-day period moving average, perhaps the 50 retrace at about 415, and maybe even another scenario, it just comes back in, retests the 100-day period moving average, getting close to the 200, close to this trend line before resuming its uptrend. Well, that is certainly possible. Look at this uptrend. We are in this uptrend. I understand we have all the sentiment, the bearish sentiment from a macro view on where the economy is. Yes, the economy has been petering out. It is not doing great. And there should be some macro wins ahead that take the economy even further south. That again does not mean that the market can stay irrational in an uptrend and not mirroring what the economy is doing for a very long time. This could last another year or so in this uptrend. We could blow off to all-time new highs. It just doesn't matter right now what the economy is doing. Eventually, that will matter, and we're going to be paying attention for a sign or signal of a trend change. What might that look like, you may ask? Well, if we take it from the daily chart, let's just remove these drawings for a second. Where does the trend start to break? Well, if we start to break down, and let's just say it happens right now. I'm not saying this will happen, but if it does happen, okay, we don't want to see this not bounce off the 200-day period moving average and go and resume uptrend here. If by any chance it comes back into this level, closes daily below this level, this is their up-sloping bull market trend line for now. And if it gets back below there, and obviously below that October low at all, that is where you start to become on guard for lower prices. And perhaps if you get some type of retracement in here and here, you could stop out above here. We might be looking for shorts in this area right here, but that's just not where we are yet. Where are we today? Well, again, we are in this important area here on the 430 level. Okay, we tagged it. It was a 618 retrace on the daily chart. Let's just see how we react. Can you play the short side to this? Absolutely. If you want to stop out above that last high, this was also, and let's zoom in here a little bit, this was also a sign and signal of a trend change. Not major, but it definitely had a little volume to it if you see here, and it's a doji candle. We like that as a sign or signal of a trend change. Would we be surprised if this was the local top here and we get a nice breather in the markets and retest all of these moving averages? The answer is we would not be surprised at all. Now let's head on over to the QQQ, the NASDAQ. This thing is just super impressive. Where are we? Well, we're closing well above the 618 retrace, so in a much stronger position than the SPY and the S&P 500. Does that mean we're not going to see a pullback just because it's stronger? No. In fact, definitely expecting some type of pullback scenario. Again, retest its 20-day period moving average, maybe even down to the 50-day period. Where does the NASDAQ go wrong? Well, we definitely want to see it stay above this 50 retrace, which is the 330 level, give or take. Now, if it gets below its retrace here at 330, starts closing candles below, and then starts heading back down to that 315 level, that's where you're going to start to be on guard here. Moving over to the all-important Bitcoin, we had an area of short interest on the chart here, and it was when we broke down and closed this daily candle right here. Below these lows, that is when you wanted to look out for the short side. So this retrace right here provided a great short entry. If I clean this up a little bit, here is really where the ideal entry for the short was. You had clear invalidation on the short. If it got back above this downsloping trend line, started closing daily and started pushing for those highs, right? So this was a very clean short opportunity. If you took that short opportunity right here, okay, you're looking for this to come back down and tag its 200 period moving average. Probably should have taken a profit right here. And this level right here, again, should be your take two profit. And if you want to ride a third trailer, this is where a ultimate target for that short would be. And that would be a pretty hefty drawback in the indices. If we head over to the indices, get rid of these drawings right here, that would probably coincide again with NASDAQ coming back down, retesting that 50 retrace, and perhaps even its 382 retrace. Would not be surprised to see Bitcoin all the way down there. So if Bitcoin is going to hold this low, we're looking for this breakout, right? If this is going to start respecting this trend line again and breaking to the upside. So let's say that Bitcoin is going to show some strength again. Bitcoin is showing strength. The indices are showing strength. The NASDAQ is just eating time off the clock again above its 618 retrace. And it's going for what? It's going for the 786 retrace at 376. Okay, $376. Also filling this all important gap right here. So would not be surprised to see Bitcoin in this scenario eat some time off the clock here, start building energy above this trend line and breaking out to the upside. And where is the trend? Let's remove this again. Where is the trend on Bitcoin from the larger perspective? Well, the trend is still up. It's above its 200 period moving average. Yes, it's eating time off the clock below the 100, which is not a good look, right? However, if it stays above this 200-day period moving average, if we stay above the 50 retrace right here, maybe even a spike of the 50 retrace in some type of flush, right? We have a flush scenario in the indices. The indices are pausing, pulling back. Bitcoin's weak. You know the story. It comes into the 50 retrace, maybe eats some time off the clock. Boom, does a quick spike, and then boom, we're back up above this trend line and we're moving in the upward direction. Would not be surprised to see that at all. That's totally normal market behavior. Is that what you want to be seeing on the long side? Absolutely not. It's not super strong, but it is normal behavior. And that's the short and sweet of it on Bitcoin. So let's move over now into the market leading indicators. What's going on with the banking crisis? Is it over? And where are we heading? So very interesting chart on IWM, which is the Russell 2000. It has a lot of regional banks in this ETF, which is why it's been so weak. It's why it's also a market leading indicator. If the economy is not doing well, right, this is not going to be showing strength. Well, guess what? It just broke out of this major range here. And if you took a look at this from a daily chart perspective, you're thinking, oh, well, this might be a bear flag. And you were right. However, time is more important than price. It ate so much time off the clock down here. So all this energy that was building to break down is now going to get released up. So look at this beautiful trend line. It just came right into this trend line. Look how perfectly it just tagged it, and now it's eating time off the clock above it. Would we be surprised if SPY and NASDAQ pull back? We see this do some type of pullback into this area and then start to chop, and boom, explode to the upside following the bull market trend that the SPY and the NASDAQ are now front running. Well, guess what? That would be totally normal, and it's something to keep your eyes on the IWM if we're going to continue this bull trend and this market has legs before ultimately, again, the economy is going to be showing weakness, more weakness, jobless claims, all of that stuff, potential bankruptcies, larger bank failures. That's all on the docket for higher interest rate environment. The speed of the interest rate environment is not great. And so we're probably going to be seeing indices turn over at some point, but it's just not yet. So we're pulling back to a monthly chart on the financial sector. You saw this at the beginning of the video. And let's just go ahead and see where we are on a macro time frame level. This is the 2007 top before this huge drawdown, and that, my friends, is a recessionary bear market, correct? We have not seen anything like that since 2008. So that's why we are on our toes with the inverted yield curve and the interest rate environment that we are currently in. However, guess what? The Fed stopped interest rate hikes and actually started pulling back around this time frame right here, this July 2006 time frame here, and the markets rallied. So what are they doing now? Well, they're stopping interest rate hikes. We're seeing strength in the IWM. We're seeing strength now show up on the XLF. Well, what do we mean by strength? Well, it's holding this really key area of support. So let's see if it gets back above this area and perhaps even goes and tags this breakdown candle high here on the monthly chart. Let's see what it does. I think it's interesting. And if we pull into a daily chart, you can see here, this was the banking crisis. It came in again to tag that all important monthly support level, and it's been holding it. So it's below its 200 and 100-day period moving average, and this is going to hold this low. This thing is going to break out above its 200-day and 100-day period moving average eventually, and it's going to tag this important breakdown area right here at least. So keep an eye out for this, and maybe that will be the local top. We don't know. Maybe that will be an area where it just eats time off the clock for another push higher, and we resume some type of bull uptrend in financials. We don't expect this to happen. However, it certainly can happen, and we just keep an eye out for it. This is a key area where I expect the XLF to stall out, at the very least top out, from a longer term perspective. Now, in the grand scheme of things, if banks are going to be in trouble moving forward and eventually the markets will top out, this trend line right here is going to break down. It already had support for 3 hits. Usually, from my experience, on the 4th hit, this is not going to hold so well. That's it on the charts, guys. This was our last newsletter. Is the global economy sick? And we broke down commodities and what it's telling us right now. Totally free right here. Again, type in your email and you'll be updated on our weekly Sunday macro newsletter. It's about a 5 to 10 minute read. It's perfect for your Sunday nights, for your week ahead, the months ahead, and years ahead. Check it out. You won't be disappointed. And last but not least, come into the Telegram channel as well. The link is in the description. We post charts, we post day trading, investing ideas, swing trading, financial news. 100% free here, guys. You have absolutely nothing to lose. Come on over and hang out with us. With all that said, I hope you have a great rest of your Sunday, everyone. Enjoy the rest of the night. See you in the newsletter tonight, and we'll see you next time.